Hey everyone, welcome to today's webinar. Thank you for joining us. We're going to be covering the 7 ways to dramatically help you in your training results. So grab a piece of paper and pen, and we'll go through these ideas here. I'm going to be covering a lot of important information. So the first thing in this idea of helping you with your results is make it simple for you. Okay, so for instance, this is a clean chart. And I'm just going to switch over to another chart for you so you can get some ideas of what I'm talking about. Here we have a chart that's just full of indicators, right? We have an RSI, the Stoch, the momentum indicator, and the moving average. Okay, so these indicators, they all lag. And so this is a 13 moving average. It's just using 13 of these candlesticks to project this average here. So if it's above the average, the idea is for buying opportunities. If it's below the average, then we're looking for sell opportunities. And you can see how right it is. So meaning that there's a lot of false break, false break, false break. And it can get really ugly, I guess you could say. So with that being said, here we have a momentum indicator. And you can see that the momentum is right, pushing upwards. And the market is following it. But then sometimes it's not following it as well as it does follow it. Okay, so you can see how consistent that these indicators could be. Like this is oversold, look for buy opportunities. If it's overbought, we're looking for sell opportunities. Here we have the RSI. Okay, this is kind of the same concept of the overbought, oversold. So some people align these indicators up, and that's kind of where the robots kind of come into place to help you automate this move right here. So they could be right. The problem is that indicators or just EAs, they don't move the market. Okay, so you as a person should know everything about what you're working with. Okay, so if this doesn't make sense to you, the best way to start is to work with a clean chart. Okay, keep it really simple is the first idea. Okay, and looking at this is we're looking for a low and a higher low in order to draw a trend line. And what a trend line is just an indicator as well, but indication that this is a trend. The opportunities that you can look for is this trend line bounce trade. So you can see right here we've engulfed and waited for the close of the candle. Okay, and stop loss behind here. Take profit at the previous high or 2-to-1 ratio. Okay, so that you have a greater take profit than stop loss. Okay, that's a big rule to have. Here's a beautiful candlestick here. There'd be an entry right here as the close of the candle. The stop loss behind here. So after it kicks off this trend line as your reference point, then take profit at the previous high. You can see that work over and over again. And then once it broke this high, that would be another reason to get in. Stop loss right there. If your stop loss is right there and your entry is right there, you want to have that 2-to-1 ratio, and it will have worked out for you. Same thing right here, bounce off the trend line. You can see the market's starting to get exhausted right there, and now it's broken the trend. And we may look for sell opportunities. But you see how simple this concept is. Okay, just wait for the close of this candle, stop loss right there, take profit right here. And again, you're using reference of what is going to be presented to you instead of after. Okay, so again, indicators may lag, and you may have lost out on this right here. They may have told you to get in right here. Another thing you want to know is that no trading system is 100%. That you're going to probably lose in some of your trades. As well as just understand the risk. You probably read the disclaimer. But there's also advertisements of certain products and services that say they have an 80% accuracy rate, or the robot never lost. It basically repaints and says that when it lost, it's saying that it won. So be very careful in what you get involved with. So if it's something that you can see the results, you know how it works, then that's great. Okay, that just gives you more confidence in the markets. The next step, number 2, is the testing. Okay, so I just walked you through a simple trading plan or trading methodology. Is just bounce off the trend line. Okay, but let's see how valid some of this information I'm giving you. Okay, I'm going to pull back the charts, and you can do this methodology on any time frame, and I'm going to be kind of walking you through some pros and cons about certain time frames. So I'm looking at the day chart, where a day chart you have a lot more reaction time, and what that means is you may want to trade with a smaller amount, but you have a lot more time to react to a good or bad situation, or even being able to pull the trigger. With smaller time frames, there's a lot of factors you want to consider. You know, how big is your account? Is there going to be liquidity provided? Am I going to get filled? And is there going to be misfire? Some people that don't understand the VPS servers and they use EAs, their computer falls asleep on them. Okay, so here's a high and a lower high. So how can I take advantage of this market? Well, I have two reference points. The way I would probably take this advantage of this market would be waiting for the break of this low right here, or this candlestick to engulf this and close. That'd be my entry point. Then if that's my stop loss above here, then I would have 2-to-1 ratio and let the trade work out first. I wouldn't want to add position or overtrade. You just want to let that trade work. Okay, if I missed out on that, then I will look for this right here. I look for the retest of the break of this low right here, and that's where this candlestick comes into place. Close of the candle could be a reason to enter, or just simply that sell limit right here, stop loss above here, take profit 2-to-1, or the previous low right there. Okay, so this candlestick right here, if you wait for it to close, that would be my entry point on the candle, and the stop loss right there, entry point right here, excuse me. You could take profit at the previous low or 2-to-1 ratio. Same thing right here. This would have been a better reference point because of this trend line. So some of you may take the trade right there as the sell, but your reference of your stop loss would be this wick, the last swing high, because if it's truly on a downtrend, then it's going to continue going downwards. Here would be your entry point on the break of this low right here, this close. This is an engulfing pattern. Okay, if you want to pause the video, you can look up engulfing pattern. This would be the close, the stop loss right there, and you can see your take profit got hit. Once it broke there and closed, that could be a reason, but you want this trade to work out before you enter more trades. The reason to get in here would be the retest of this support. So breaks, comes back and retests. In order to look for, if you get in right here at the test, then again your stop loss above the previous high, and then 2-to-1 ratio. Or if you wanted to wait for this engulfing candlestick pattern, that would be a reason to get in, stop loss right there, and then you just have a smaller stop loss to take profit. Okay, so once it broke this trend line, what a trend line is just indicating, doesn't mean the market has to go up. It's just saying that it may be reversing, that the trend is ended on a downtrend. A couple ways you can approach it is the breaking candle as a close, stop loss behind the previous low or behind this trend line right here. And you could probably trade back to its origination. I mean, it'd be a long trade to hold, and it does get there. But another way to approach this, okay, so there's a breaking candle. Here's a resistance that it broke out of. So you could look for this retest. You could have benefited from that, and then your stop loss behind here. You can see the market never came back down to this price. But if you were interested to get in because you missed out on these opportunities, there was support. This is something you could refer to. Bounces back up. This is where I'd be interested in this price range. Again, I would probably refer here as my stop loss, or you can simply look for the break of these highs. This high and this high, which was a small trend line that we have. This would be your breaking candle, stop loss behind here. If you did get in, again, here's your retest of this high right here. See how it retests? Retest could be your entry point. If you take the retest, your stop loss must be the previous low, which is, this is kind of a fuzzy low. You could take this one. If you do decide to take this one, then you want to have a 2-to-1 ratio. Again, you could look for this really strong candlestick as your entry point. Your stop loss could be tighter in that way, and then you could either take the break of this high right here, stop loss right here, and take profit. Now I'm just showing you some good stuff, of course. You're going to have some losing trades. Let me kind of see if I can find a trend line that's not going to work out. This one's perfect, so it doesn't work out, right? You might have taken profit early, but now this is starting to trend upwards. But this might have been a losing situation. You may have broken even if you moved your stop loss into +1. You might have taken the trade when it dinged off this price or engulfed and took some profits down here. Then started to trade with this trend line right here. Okay, so you can see it's starting to trend upwards. And with the bounce trade is very valid right here. I mean, you have multiple bounce trades that you could have taken advantage of. So again, you want to know like how well this trading methodology works for you. I just showed you on just the US CAD and the Aussie dollar on how this methodology works, but it works on every single time frame. And if you trade, anything, you just want to make sure it's going to be for you. Because let's actually number 3, we're going to be talking about schedules. Okay, so what is your trading schedule? Are you going to be someone that's going to be extremely busy? Because if that's the case, then the day chart is going to be more sufficient for you. But some of you have questions saying, I have a fully automatic system, or I already have a trading system. Okay, well, just make sure you test it. And like I say, you want to back and forward test it. So right here, let me just walk you through what back testing looks like. So some of you may have an alignment with certain indicators, so like the RSI and the Stoch. This is overbought, we're looking for sell signals. And then you have to look for why it's going to take profits. Here it's oversold now. We're looking for buy opportunities. Overbought, we're looking for sell opportunities. You can see the alignment. And you just want to have those rules concrete where it makes sense to you. So you could actually have a fully automatic system that does work for you, but it may only work on like the Aussie dollar. Why wouldn't it work on other pairs? Well, let me give you that information there. Well, for instance, the Aussie dollar, this one right here, this candlestick, let's just measure it. It's about 70 points. If you look at like the pound yen, okay, the same size candlestick, that one's a little bigger, but right around here, it's about double, like 140-50 pips. So just because of the volatility can make the difference in the world for your trading system. Okay, so that's, even though it's visual, it can be a complete different if you try to fully automate that system. So again, you want to either test your fully automatic systems, forward test it, back test it, and make sure it's in alignment. If the results are not coming out, then you want to just start fresh with a clean chart. Okay, so some of the concepts I'm talking to you about is it can work on any financial instruments if you trade CFDs or stocks or FX, but let me kind of walk you through another concept as well that kind of gets misinterpreted. So here we have this one candlestick that's on the day chart. If I kick down to the 1 hour chart, then we're breaking that candlestick in 24 candlesticks to equal that day of activity. If I look at that one candlestick right here, then I go to the 1 minute chart, then I'm breaking that one candlestick up to 60 of these candlesticks or bars. So what does that say about smaller time frames? You're actually really basing your trading on just this bar. You're not considering all this right here. But there's pros and cons about smaller time frames. Okay, so let me kind of walk you through that idea and see if it's for you, because it may not be. So we're just on the 1 hour chart, and we see that there's support, and we see a breakout opportunity. Well, this breakout opportunity only takes it like 8 hours. This could be when you sleep. You might have been right here, and you might have thought that was going to come back up and bounce off of it. Okay, so a couple things you want to test and realize is it going to fit my trading schedule? Is it going to be somewhere I can make sure that I can take advantage of the sell and have my stop loss there and let this thing ride? Is it going to be when I'm going to be at work or asleep, or am I going to be gone? Okay, so those are some questions you want to it's more of a personalized scenario. So this might not be for you. Okay, some people can handle the 15-minute chart or the 5-minute chart because they're day traders. But the same thing again when the breakout happens, or if it's a bounce trade that you're looking for. Um, yeah, are you going to be able to take this position and have your stop loss right there? And you can see this is only like a 3-hour window. So this 3-hour window could happen when you're eating or just busy, or so that's why the scheduling is so important. Okay, so if you have a really tough schedule, if you're working like 80 hours a week, you're only going to be able to look at charts for maybe 15 minutes or 30 minutes, then probably you want to consider the bigger time frames. Now, there's going to be less signals, like I said, this trend line signal, but you have this much time, which is a couple weeks for this trade set to happen. But when the trade set happens, then it does good. Okay, so that's one thing you want to consider depending on your schedules there. Number 4 is having trading rules. And I want you to really understand what these rules mean, especially for those that are in the U.S. versus outside the U.S. It could be a big difference because margin or your leverage is different. So with those that have U.S. accounts, you have less leverage to work with, which leverage is a double-edged sword, of course. It can work for you or against you. But that's the thing, is you don't want to overtrade. That means that you don't want to sit there and just go through too many charts and try to place tons of trades because you think you're going to miss out on opportunity. You do want to practice. Okay, you want to practice your trading system before, or you know why you're entering the trade, so you have a good reason to enter, like this. That will help you to say that this, you want to be selective, is what I'm trying to put it at. You want to be selective in the trades that you're looking for. It makes sense why it would work out, or that you can walk away and say, let this trade run its course. Okay, so let me just walk you through some mentalities in this trade setup. So sometimes some people would say, okay, there's a red candlestick, I'm going to sell. So you can see and they may switch time frames. So they may look like it may look like it's going to go down because this is red at one point, and they sell right there, and then all of a sudden it goes against them. They start moving their stop losses, and they get knocked out, or they close it out manually. And then they see that it's a big white candlestick, thinking that the market may just say, "Well, I think it's going to go up now," and that's where it can get dangerous. Again, they start pushing buys. Or some people do look at one currency and they're in a trade, but it's losing, so they start to try to catch up by placing more trades on different currency pairs. Okay, oops. So as you can see, there's a breakout trade that you're wondering why I didn't take it. Well, I already have some trades in, and I'm letting them run their course. Okay, so that's something you also want to consider, is your margin levels. You want to keep them above 200, 300%. You just don't want to risk your whole account. You don't want to, again, you want to open a demo account or something that's realistic, that you can handle the emotional side of trading as well. Okay, so basically sticking to your rules, knowing when to say this is not going to work out, I'm done with this trade, or I'm just going to let this trade run its course, and then move my stop to break even. Then I don't have to worry about it anymore. Okay, so there is temptation where trades, you're in a buy right here, and it is in the positive, and then you feel like, okay, because it is an uptrend right here. Okay, so some of you might think that this is a buy opportunity, but you don't wait for this candlestick to form here. So you might want to put a buy right there. You want to make sure that your trades are small enough that if it gets stopped out, then it's not going to wipe out your whole account. Okay, so that's some of the trading rules I have. I kind of walked you through how to trade the break, the bounce trade. Okay, so this would be the signal I'd be interested in with this pair, as you can see. So number 6. Okay, so after you're able to like review your trades, and that's with any trading system, if it's fully automatic or even manual, you want to go back to your trades and see why you could have done better or what you did right, what you did wrong. If you followed the rules or you didn't. So with this trade, the pound yen moves a lot, so I'm giving this a lot of breathing room for this thing to move up or down. But this is very considerably very small lot size for this thing to do that. Whereas I was more confident with this pair right here. So that's bigger lot size here. Stop loss there. So you can have fixed amounts. You want to think about pips, but also just realize what the pair can do. So some of you that like fast moving markets, the yens are going to fit you. If you like the slower moving markets, then the dollar pairs are going to be better for you. So we covered the time frames there. Okay, so like I said, on a smaller time frame, just realize that there's just a lot more variables to consider, like just getting filled or news announcements spiking you in or liquidity in the market. So for those that like smaller time frames, the idea itself works the same way, like breakout trades and bounce trades. Here you breakout, see how it breaks out, here your retest. And it's actually pretty amazing that it works on all these pairs. And right here I'm just going to give you an example so you can see that you might have thought that was going to be a bounce trade. Here you would just got simply stopped out. So this would have been inevitable for you to win on this trade. Okay, so number 7, I'm just going to cover the most important thing out of all of them, is the mindset. I mean, if you're not willing to take your system through this whole testing process, the whole 7 steps I just covered with you, you don't test it out, you don't know what it's doing for you, you're just going to be buying tons of robots because they're all hypey, a lot of hype, and or whatever trade system you may have. You want to take it through the course of what I just covered with you. It's going to work good with that broker that you're working with. Okay, some brokers provide a lot more liquidity so they can handle bigger accounts. Some specifically look for small accounts. Some can take US accounts. Some cannot. Okay. So yeah, so I think the mindset is the most important thing. So if you're not mentally in the game, you don't want to look at a chart. So I mean, if you're having a really rough day, trading itself is not going to make it better. Okay, so I think the best way to look at this market, I'm just going to walk you through this step by step in how I looked at this market. Okay, so again, you can review it. I may have already covered it, but I just want to show you on this market. Here we have a trend line break. This would be the entry point. Stop loss would be behind this candle. If I didn't see that, I would look for that retest. Retest of this trend line or retest of this resistance. There's your entry point. Stop loss there. Wait for this candlestick to form. If I did not take any positions yet, this would be my position. Stop loss there. Take profits 2 to 1. Here we have a trend line bounce trade. Bounced off of it. You could have gotten right there. Stop loss right there. But you could wait for the close and the stop loss there, and you can see it's just working its way upwards. So if you're able to explain yourself, like I said, at this website, mt4ms.com, so the number 4 is included, so mt4ms.com. Come to the website. I'm going to have a room for you and some videos so you can get better insights of how to use these methodologies. Again, you want to test them out first, and then yeah, if you feel confident, that's your choice to start implementing and start making some money. Okay, guys, you have any questions? Thank you. Yeah, it was very informative. Thank you. All right, well, you guys have a wonderful day, and we'll talk to you soon.